Hey, welcome back. It's JWalter here. In today's housing market update, I'm going to share how challenging it is to be a home buyer right now, given the fact we have such a lopsided housing market between home sellers and home buyers. So let's dive right into the video. And if you do get any value out of this video, then please hit the like button. Also consider subscribing as well. So this is a new report from Redfin. They announced that prices reached new all-time highs as fewer Americans are putting their houses up for sale. I have a lot of data to share with you regarding this, so let's go ahead and dive right in. So housing prices, which by the way, Redfin is really good with their data. They go over median sold prices and also asking prices. So I want to clarify something, because when we're talking about median sold prices, we're talking about what the housing market was like approximately 1 month ago when the home seller accepted an offer from a home buyer. So when we're looking at sold prices, that's not really an indication of what our housing market is today, because that is from activity from a month ago. So with that said, let's go ahead and talk about housing prices. Housing prices jumped the most since the summer, up 17% year over year to a new all-time record high, as a 7% drop in new listings kept homebuyer competition elevated amid rising mortgage rates. I have a lot of stats to share with you guys regarding this. Meanwhile, nearly 3 in 5 homes were snapped up within 2 weeks, meaning the home seller accepted an offer within 2 weeks. That's also an all-time high, and half sold for over their asking price. So part of the issue we have right now is this clear imbalance between supply and demand. Right now, it appears that demand is still very strong, but we'll have to see if that changes though in the coming months, because mortgage rates have been spiking. In any case, we have a lack of supply because homeowners are staying put. A lot of people have very low mortgage rates of less than 3%. And they're looking at high home prices as well as elevated mortgage rates as well. And so they're looking at that and going, why would I sell to move to a 5% mortgage rate rather than having my 2.7% rate? So this increase in home prices plus mortgage rates is causing issues for home buyers as well as home sellers. So as I mentioned, home sellers are not listing their houses for sale because of this issue, but also it's affecting home buyers right now who are currently looking for a house to buy. So I thought I'd break this down for you guys as far as like a mortgage payment goes for principal and interest payments only. So have a look at this. Let's just say someone's looking to buy a $400,000 house. That's the approximate median sold price in the US right now. Let's say they're putting 3.5% down. That would be a loan payment or a loan amount of $386,000. If you were to buy a house for $400,000, back in August of last year, that was near all-time record lows for mortgage rates, around 2.75% for the average 30-year fixed-rate mortgage in the US. So assuming a 30-year mortgage, again, we're only looking at principal and interest payments here, not property taxes, PMI, etc. At a 2.5% mortgage rate, your total monthly payment, meaning principal and interest, would be $1,575.81. But have a look at how this changes though when mortgage rates increase. So again, a home value of $400,000, putting 3.5% down, but now mortgage rates right now are approximately 4.95%. They have increased from August from 2.75 to now 4.95%. And when you calculate the principal and interest payment on that 4.95% rate, that gives you a $2,060 per month housing payment. So in other words, you go from $1,575 per month to $2,060 per month, or an additional $500 per month, just because rates have increased to 4.95%. And that's further causing an issue for home buyers. And by the way, whenever the mortgage rate increases by 1%, that causes the buyer's purchasing power to decrease by 10%. So if they're pre-approved for, let's say, $400,000 when rates were at 3.95%, then now the maximum they'll be pre-approved for would be 10% less than that. So rather than $400,000 for a loan, let's say, they'd be pre-approved for $360,000. The problem with that is that home prices have not been decreasing. So that's a big issue. So going back to this report here, this is the key takeaways for the 400 plus US metro areas, according to Redfin. And this is for the 4-week period ending March 20th. And March 20th also, of course, had a very high rates as well. Around March 20th, or at least the week of March 20th, rates were around 4.5%. So the median sold price, of course, again, this is a lagging indicator, is up 17% year over year to a new all-time record high of $379,000. Honestly, I'm so sick of reporting record high home prices. I can't wait to report a more balanced real estate market. That's the biggest increase since the 4 weeks ending August 1st, 2021. So what's been happening so far this year is that home buyers appear to be trying to buy a house before rates increase further. But we'll have to see if that changes though, because rates have increased greatly just in the last week though. Meanwhile, the median asking price, this is the asking price that home seller asked for their house for sale, that increased 15% year over year. And the monthly mortgage payment on the median asking price rose to a new all-time high of $2,183 per month at a current, at that time, 4.42%. So of course, now rates are about 5%. So this is going to be reaching a new all-time record high. And this again was up 28% from 1 year ago when rates were 3.17%. Isn't that crazy? Rates were 3.17% 1 year ago. Now they're at 5%. The biggest increase we've had, I believe, since the 1990s. Meanwhile, new listings, this is when a home seller lists their house for sale, are down 7% from 1 year ago. Of course, that's a big issue. We need a big increase in housing supply in order to cause home prices to decrease significantly, in my opinion. In addition, the number of active listings, which is another word for housing supply or housing inventory, fell 23% year over year to a new all-time record low of $469,000. When you go onto Redfin's data website, they haven't updated it to the most recent stats here, but have a look at this because for the 4 weeks ending March 6, 2022, active listings or housing supply is down almost 24% compared to 1 year ago. But have a look at this. In 2021, we were down 34% compared to 2020. At this time in 2020, we had just under 1 million houses for sale. And now, as of the end of March 6, 456,000. So down almost 50% compared to 2 years ago. Meanwhile, 59% of the houses that went under contract had an accepted offer within the first 2 weeks on the market, and that is a new all-time high. So here's a really good graphic depiction of the median sale price. This again is a lagging indicator, but look how straight up this is compared to prior years, especially 2020, when at that time we felt like the housing market was on steroids, but 2021 was even more so. So now median sold price up 17% year over year. Again, this is a lagging indicator, so we'll have to see if home buyer demand decreases due to rising home prices and, of course, rising mortgage rates as well. The median asking price also has spiked greatly, up 15% year over year. Look at this mortgage payment, average mortgage payment up 28% year over year, way more than the past couple of years as well. Big issues because we have a big issue with housing affordability. And here's a more leading indicator of our housing market. So pending home sales is when a home seller accepts an offer from a home buyer, and then approximately 30 days later, the house officially closes escrow and the house is sold. So right now, our pending home sales, according to Redfin, are basically right in line with 2021. We're not seeing this big spike, which is a good sign because, of course, we have a lack of houses for sale. So right now, the number of pending home sales is basically in line with 2021. However, though, we have a much lower amount of housing supply compared to 2021. So this goes to show how pending home sales still remain very elevated. But we'll have to see if that changes here in the next several months. And here's a graphic depiction of the 59%. So basically 6 out of 10 houses went under contract within the first 2 weeks of being listed. That's a new all-time record high. Back in last year, we were at just over 50%. And in 2020, which was still an elevated housing market, we were at about 45% of all listings went under contract within the first 2 weeks. So now we're at almost 60%. Meanwhile, 45% went pending within 1 week. In 2021, it was just over 40%. And then in 2020, just over 30%. So a big increase compared to the past couple of years as well. Meanwhile, the days on the market decreased to 21 days for the 4 weeks ending March 20th, much lower than the past couple of years as well. Again, this is a lagging indicator though. We'll have to see if this changes though. And 50% of houses sold above their asking price. Back in 2021, it was just under 40%. And look at 2020, we're at about 20, I would say probably 23% of houses sold above their asking price. So now we're at 50%, almost double the share or double the rate compared to 2020. So because we have this affordability crisis here in the US because of spiking mortgage rates and of course spiking home prices, a lot of people are looking to condos to buy because single family houses are so much more expensive. This is according to Redfin again. This video is not sponsored by Redfin, but they have a really good website for housing data and also articles about the housing market. So condo prices jumped to a new all-time high as buyers seek relatively more affordable options. So the typical US condo sold for a record $319,000 in February, up 14.6% from 1 year ago and up 22.7% from 2 years earlier. Meanwhile, single family houses reached a new all-time record high, up 15.9% from February 2021 to February 2022, and up 35% from 2 years ago. And as you can see here in this graphic here, condo prices reached an all-time record high, $319,000 compared to single family houses in February of $406,000. But really ever since, I would say May of 2020, condo prices and single family houses have been increasing greatly. And of course, that's one reason why people are buying condos. Also, I believe in California, the median sold price for condos also reached a new all-time record high in February of this year. Another trend that Redfin is reporting on is that because of housing affordability becoming a big issue, a record share of US home buyers are looking to relocate to more affordable areas. So with home prices up 16% from 1 year ago, and mortgage rates increasing greatly, many Americans are searching for houses in more affordable areas. The share of home buyers moving from one part of the country to another set a new all-time record high according to Redfin. Nationwide, 32.3% of Redfin.com users looked to relocate in January and February. That's up from 31.5% in the first quarter of 2021 and up from 26% in 2019 before this pandemic began. Here's a graphic depiction of that. Have a look at this. So from January to February 2022, that share was 32.3%. Higher than any other month going back to Q1 of 2019. And here's where they got this data from. The latest migration analysis is based on a sample of about 2 million Redfin.com users who searched for houses across 111 metro areas in January and February. To be included in this data set, though, a Redfin.com user must have viewed at least 10 houses in a particular metro area, and homes in that area must have made up at least 80% of the user's searches. So they're basically looking at users who are constantly looking at houses for sale in a particular area outside the area that they currently live in. So that was a lot of information to cover in today's video. So I want to share a summary of today's video to kind of wrap up this video. So right now, of course, we have a severe supply versus demand issue. We have record low supply, and that's driving up home prices to new all-time record highs. So therefore, we have a very unhealthy market for home buyers right now because we have a spike in mortgage rates up about 1% in just the last 3 weeks, yet prices have not come down yet. Rates have spiked again about 1% in the last 3 weeks to 5% for the average 30-year fixed rate mortgage. And that's causing the future housing payment for home buyers looking to buy a house right now, that's causing it to increase about $500 per month on a $400,000 house with a 3.5% down payment. And this increase of by 1% is also causing a 10% decrease in buyers' purchasing power. Therefore, we have a housing market affordability issue with home buyers right now. Buyers are flocking to more affordable areas and purchasing condos rather than single family houses because of this issue. So here are some key questions. Will home buyer demand slow due to skyrocketing mortgage rates? Will homeowners not sell due to high prices and high rates? In my opinion, the people looking to sell their houses may have a financial hardship. They need money out of their houses because equity in their houses are at all-time record highs. Or will we see people looking to sell their houses to move to more affordable areas? It's nearly impossible to predict what will happen regarding these two questions here, but we'll have to see. I'll definitely keep you posted. Also, what's your biggest takeaway from today's video? Hope you got a lot of value out of it. If you did, please hit the like button. I greatly appreciate it. And also consider subscribing if you haven't done so already. Hope you have an awesome day and look forward to seeing you on the next video.